This is the WealthAbility for CPAs show. Better clients, better practice, better life. Here's Tom Wheelwright.
Welcome to the WealthAbility show for CPAs, where we're always discovering how to build better clients, better practice, and a better life. Hi, this is Tom Wheelwright, your host, founder and CEO of the WealthAbility Network. So lots going on in the world of disclosures and corporations and pass-through entities. We've got proposals. We had a bill passed in January. So to make sense of what's kind of happening in the world today when it comes to asset protection in general and disclosures, all that, we have my good friend Garrett Sutton, another one of the Rich Dad advisors like myself. We get together every Thursday to talk about whatever we're going to talk about with Robert Kiyosaki and Kim Kiyosaki and the other Rich Dad advisors. So Garrett, always good to have you on our show. Thanks for coming.
Thanks, Tom. Thanks for having me.
So if you would, just give them a little bit about your background so that I think most people will know you from this show, but those who don't know who you are.
Well, my name is Garrett Sutton. I'm an attorney here in Reno, Nevada. You've got the state of Nevada behind me. And I've written books in the Rich Dad Advisor series, Start Your Own Corporation, Loopholes of Real Estate. And I've been involved with Robert Kiyosaki and the team for 20 years and have traveled the world with Robert and the Rich Dad Advisor team and Tom talking about financial education. And it's something that people around the world are grasping for. They don't teach it in school, not only in the United States, but they don't teach it in other countries as well. So we've had a great time going around the world talking about financial education, how to protect yourself, how to take advantage of the tax code like Tom knows inside and out. And so it's great to be with you here today, Tom, and with your audience.
No, I appreciate that. So, CPAs, I always tease them now with what you tease me with, that CPA stands for cannot protect assets.
Which is true.
The other thing, by the way, you may not know is that CPA also stands for cheapest people in America. So,
which is at some point,
which actually probably ties in, which is why CPAs tend not to form corporations because it costs money, right? And they don't want to spend the money. So we've got some developments here which are really big. In essence, big government getting more and more into what's going on in your personal life. And we had this law passed in January, and I'd like you to talk a little bit about that. And then what I want to do, because there's some requirements. And I think as CPAs, while we're not the attorneys and we're not technically responsible for this, we're the most trusted advisor financially for our clients. And so we really do need to understand that this is there, because what happens when they don't know and their attorneys don't know, it's really up to us when we're doing tax planning to consider asset protection in it, to consider these other reporting obligations that maybe our attorneys have, but our clients don't know about. So Garrett, tell us about this new law in January. And then I actually want to talk about the proposals, Biden's proposals, and maybe even a little bit about this proposal to dip into your bank account. So,
well, Tom, the Corporate Transparency Act, the CTA, was passed January 1st, 2021. And, it just hasn't received that much attention. It requires that you provide the U.S. Treasury with certain information about who the beneficial owners are of your company. And right now they're promulgating the regulations. So we don't know what the regs say quite yet, but they have to be passed by January 1st, 2022. And within a year or so, they're going to require every existing and every newly formed corporation, LLC, limited partnership, with a few exceptions, to provide this information to this central database. It's called the Financial Crimes Enforcement Network, FinCEN. And as that tells you, the reason they're doing this is,
So basically, Garrett, FinCEN is who regulates our bank accounts overseas, right? So we do these reportings right now. This actually becomes even more important for CPAs, because guess what, folks? We are probably the ones that are going to be doing the reporting here. We're already doing this for bank accounts overseas, right?
Right.
We have to report any bank accounts overseas. This is actually fairly similar to that, but maybe even more so, right? So sorry,
Well,
I just want to explain that this is something we're probably going to be responsible for.
Well, and listen to who they want you to send it to, the Financial Crimes Network, right? So they're thinking that they're trying to stop money laundering. They're trying to stop people misusing corporation. That was the intent of the whole act, is these elite groups got there, in front of the Congress and said people are misusing these entities. So we need a mechanism to find out who owns the entities. And so there are a few exceptions. The main one is if you have a company that has 20 or more full-time employees, sales of over $5 million, and an operating presence in the United States, you may be exempt from that. But anybody who falls under those thresholds, most small businesses.
So this is actually requiring reporting only for small business.
Right.
Wow.
Right. And so what do they want? Well, they want your full legal name, your date of birth, your residential or business street address, not a PO box, and your driver's license or US passport number. They want a unique identifying information. And they really want to find out who the beneficial owners of these companies are. So a beneficial owner right now under the regs here are people who either own or control 25% of the entity or exercise substantial control. And so, they want to find out who owns every single small business entity. If you invest in real estate, if you have an LLC to hold a brokerage account, whatever, you're going to have to file this form every year. And then, of course, the criticism of this is it's just a lot of extra work for every single LLC owner in the country. But those objections were overcome by the need to have this information to prevent money laundering or whatever else they're.
Okay, so on top of this, Garrett, so let me get this right. We set up a holding company in Wyoming, and that holding company owns an LLC in Arizona and an LLC in Georgia and an LLC in Texas. Then each one of those LLCs is going to have to provide information. Right now with the Wyoming LLC, right, that's private information. Nobody knows. So now all of that's going to be made public. Here's my next question though, Garrett. So will FinCEN be sharing this with the IRS, or will the IRS automatically know it because it's going to be filed with your tax return?
Well, this information can be provided a request from a federal national security or intelligence group, certain law enforcement agencies overseas, a request from a financial institution or any regulatory agency. So yes, the IRS will be able to get at this information.
So Mr. Rettig, IRS commissioner, is going to be really happy to know this stuff because he's been targeting partnerships and investment companies for the last couple of years. And there's obviously, you've read a lot of rhetoric in that. And that will be for years beginning in 2022?
We're not quite sure yet. It's either 2022 or 2023.
Okay. So they might push it off. Now
they might push it off a year.
There's been in the Biden proposal, one of the proposals is that banks will have to report all cash not of cash, but all cash coming in and going out of every bank account. Okay. So that basically the IRS has access to do what we'd call a cash audit of every single person and company, and you'll have to justify why any money that comes in isn't taxable. So let's say, for example, Gary, you have your business account and you have your personal account, and you put money into your business account because it needs some investment capital, right? Right. Under this proposal, you would have to justify that that's not income to the business.
Yeah, where does it end, Tom? The penalties, if you don't file this FinCEN form, are $10,000 and or 2 years in prison. So, it's pretty serious. They want everybody filing this form. And it's kind of funny. When they passed the act, Tom, they said, we are going to guarantee that no one will be able to hack this account. FinCEN will be free from any possible attack. This was the same week of the SolarWinds hack.
Oh my heavens.
So they're telling us on one hand, this will never happen. And in the same week, it happened. A major hack of government agencies. So this information, I don't think you can feel like your information is secure these days.
No, it's well, Russia's made an entire industry, hacking industry, right? To hack into the US. So can we, if we can, I know that it's not law yet, but let's shift a little bit to the Biden tax proposals, because the Biden tax proposals, I think, impact the asset protection. So let me give you one. So we've all heard about the capital gains proposal, right? We both got the capital gains at death, right? You die, you pay capital gains. If you're alive and you sell your assets and you're over $1 million of income, you pay capital gains rate at ordinary income levels, right? We know all that. Here's what most people probably don't know, Garrett, and probably even most attorneys don't know this, and that is that if you transfer assets, that's subject to capital gain. So for example, so right now, we work a lot together with our common clients, and we'll set up, again, let's take this holding company in Wyoming we're talking about, right? And we actually so we buy the real estate, because typically you might buy the real estate outside of the LLC, right? Now we actually put it into this holding company, and let's say we've got 2 owners, so it's a partnership. So under this proposal, that's a taxable transaction. So here's my question. Let's kind of fast forward a little bit. Heaven forbid, let's say something like this passes. And so your only choices to protect your assets without taxation are an LLC taxed as a corporation, an S corporation, or a C corporation, that if you have it taxed as a partnership, then it's going to be taxable. What do you do from an asset protection standpoint? Because does that not, that could make the asset protection cost prohibitive, right? Kind of like Tennessee.
Exactly. And first of all, I can't understand the rationale for this rule. And I've got to believe that people would stand up to it, but who knows? So let's say that the only way you can get asset protection is to take title in the name of an S corporation. Is that what you're saying?
Yeah. Without paying tax, yes.
Without paying tax. So you would use a Nevada corporation. Nevada is the only state that provides the charging order asset protection to corporate shares. So we do have that little wrinkle there. But, then when you want to refinance the property, you pull it out of an S corp, that's a taxable event. And with an LLC, it's not. And so what's the point of this?
Well, there's a lot of punishment of small business. I have my own feeling. I think this is very much a big corporate grab. I think all of these proposals are, I think there's a lot of money from big corporations going into the administration and the people who are proposing these things, because they're the ones who benefit, right? If you have to have a fire sale of a business, who's going to buy that? It's going to be the big company, right?
Right.
So I think that there is a lot of that, but I go back to, we talk a lot about the cash flow quadrant, right? The 4 ways you earn money: employee, small business, big business, and professional investor. And it seems to me like, what Robert constantly drills into us, which is you want to be in the I side, right? That maybe what we're going to have to do is just think that way and actually look at, rather than have personal credit available, build corporate credit. Instead of having, instead of selling it and getting capital gains at low tax rates, maybe what we have to do is build a bigger business and then do an initial public offering, because that's not taxable, right? So maybe we're just going to have to rethink. Really, I may actually force us. Robert might be happy with this. It might actually force us even more so into that being the I side.
Well, that's a good point, Tom. And there's always going to be a CPA, an attorney like the two of us that are going to figure out ways around it, or ways to make it work subject to the new regime. But I just to have to spend that time and energy and affect the way people invest. The way the system works right now, it does encourage people to start out and invest in a duplex and continue to invest and to provide housing. Part of the reason for these tax advantages for real estate is so that the government doesn't have to provide the housing. We want the private investor to provide the housing. And now you're going to take away that advantage so that big companies can provide the housing, which they're not as good as the small investor.
I don't know. Now you've got BlackRock doing it, right? You've got the big conglomerates doing it instead of the small investor, and basically you're kicking out the small investor. Right. I mean, that's what getting rid of Section 1031, right? You limit it at $500,000 or $1 million. I mean, you're basically eliminating most small investments by doing that. And so who does it? The big companies, right? So it's really an interesting policy shift from my perspective.
Well, I'm thinking the Boston Tea Party here. I mean, this is like the East India Company taking over our economy like they tried to during the Revolutionary War. So who knows how this plays out?
Yeah, it'll be interesting. But I think, you make a good point that, there's always going to be some smart attorney, some smart accountant who figures out how to deal with this. It's like when AOC proposed a while back that 75% tax. And Robert's response was, well, what she doesn't understand is the rich don't pay tax. And so there's, even if you look in these proposals, for example, the solar energy credits are so big in this bill that you just have to shift your investment strategy, right? So I think that's the point to remember, is that we've got to get the education because our clients are depending on us, right? Now, the other good news, Garrett, I don't know if you know this, is that these proposals, with the exception of the capital gains increase, but all of these other proposals, including the gift tax and the estate tax, all that kind of stuff, they don't happen until next year. So that means we got a window of opportunity. I got to believe that your friends who are all estate planners have got to be slammed right now for people planning.
Tom, I'm hearing it from my clients too. They're saying, we know something's coming out of Washington. I know that I'm going to have to transfer assets this year, and they're getting ready for it. So, and that's prudent. Everybody who has assets. That's the right thing
to do. I think if as professionals, if we're not doing this planning, I think we're really doing a disservice to our clients. I think, working like we do with the attorney and the accountant together to develop these strategies, I think we've got this short window of opportunity, right? We got 6-7 months to do this. The good news is you don't have to sign the bottom line until December 31st. You can do all the planning, and if it doesn't happen, great, don't sign it, but at least do the planning.
Well, but a thing for your clients and CPAs to know is, these appraisers who have to do appraisals on these properties are going to get swamped. And right. If you're thinking of doing some gifting this year, line up that appraisal or appraiser right now. Because the guys I know, they're starting to get busy. And you can imagine by the end of the year, you may not be able to get an appraisal.
No, I agree. Between the appraisers and the estate planning attorneys and drafting all the trust documents. By the way, I don't know if you know this, but except for a completely revocable trust, you transfer your property into a trust, that's a taxable event under this proposal. So, it's not just a gift taxable event, it's an income taxable event if right. You transfer it under this proposal. So we'd better be ready. I think that's the lesson here.
Yeah.
And I appreciate the update on one more form for us to file with the tax returns, because I absolutely know that clients are going to expect us to file that form. I don't think they're going to be going to you, Garrett, and saying, Garrett, would you file this form? I think they're going to be going to the accountant, because I think it's going to be part included with the tax return, and you're going to have to file it as part of the tax return, just like we do with the foreign accounts.
Well, and you're right. At this point, it's a guess. We don't have the regulations. So, but if it is part of the tax filing, I mean, it certainly makes sense for the CPAs to do it every year. There's only a $10,000 2-year in prison penalty. So we need to take care of this somehow.
For everyone, and every single one of our clients has multiple LLCs. So you're talking about an enormous amount of filing.
Correct.
Enormous amount. So it is the Accountant and Attorney Full Employment Act. So we love that part of it, though not really, because we don't really want to increase compliance for our clients. Okay, so I promised Garrett that we would talk about Section 181. So Garrett is an aspiring film producer. So we want to talk about, I promised him we'd talk a little bit about this section, which actually has some great benefits to it.
It does, Tom. I was never really aware of Section 181, and I'm working with a director. We've picked out the screenplay. We're raising the money. And, with Section 181, you can deduct the expense of the film in the first year. If you film it in Georgia, there's a 30% tax credit. So you put in $100,000. The state of Georgia gives you $30,000 back.
That's a refundable credit?
Yeah. And so you put up $100,000, you get to write it off in the year of filming. You get $30,000 back from the state of Georgia. So if you're in a 30% tax bracket, you get 60% back, and you roll the dice on 40%. So it's really a neat proposal, or a neat way to get the movies made. And we're doing a straight G movie. They don't make these kind of G movies anymore. We're going straight for the families, and it should be a very enjoyable and it's going to be a great learning experience to do a $5 million budget movie.
That's awesome, Garrett. So thanks for reminding us that there are sections in the Internal Revenue Code we don't always think about, that some of our clients, you never know. It could be a client who's an attorney who happens to, always have wanted to do a film. So you never know who wants to do this stuff. So we need to keep that in mind, because the more we can educate our clients, the more we can give them this information ahead of time, and make sure that we always connect with the attorney. Right. Let's not be saying, well, that's a legal issue. That's a problem for the attorney. It is, we are that primary advisor. So we need to make sure that we're communicating with the attorney, like Garrett's office does with our offices all the time. And what happens is the clients they become more engaged. They're more willing to pay the fees. They don't complain. They're happy, and they just become such better clients. And we all know that when we have better clients, then we, by definition, have a better practice. And we all know that we spend so much time at our practice that we'd better have a better practice if we're going to have a better life. So that's what we're going to do. Thank you, Garrett. Very quickly, how do we get to you?
Our company, Corporate Direct, you can go to corporatedirect.com. We also offer a free 15-minute phone consultation with clients if they want to see what we can do in terms of setting up and maintaining, very important, maintaining corporations and LLCs. You can go to corporatedirect.com, or 800-600-1760 is our phone number. So I thank you for that, Tom.
Awesome. Thanks, Garrett. And we'll see everybody next time. Thank you.
You've been listening to the WealthAbility for CPA show. Better clients, better practice, better life. To learn more, go to WealthAbility.com.